Hello and welcome to this video presentation on patent rights, how to account for patent rights based on the SYSCOHADA accounting framework. The video follows from our ongoing video presentations globally on the SYSCOHADA accounting framework, and the past presentations have been looking at intangible assets, and patent rights are a type of intangible assets. So first we're going to look at the framework as a whole, class 2 intangible assets, and as we mentioned earlier, our focus now is on account 2.1 intangible assets. This is the breakdown of account 2.1 intangible assets, and this particular video presentation will stress on account 2.1.2 patent, license, concessions, and similar rights. So let us have a breakdown of this accounting. So account 2.1.2 deals, as we saw the name earlier, it deals first with patents, secondly with licenses, thirdly concessions granted by government entities, and then other concessions and similar rights. So if you're okay with that, that was just to set the tone of the video presentation. Let us look at the table of contents then. So this table of contents for this particular presentation will stress on the definition of patents, initial recognition criteria of patents. As we see there, we have two types of patents, and then how patents can be amortized. So the first thing for us is to define what are patents. And you see that generally patents give, or documents which give to the inventor of a product or process the exclusive right to make and sell or use the invention during a certain period. So see that in this definition we have the term exclusive right. We have the term exclusive right because the owner of the patent is the only person who can make, sell, or use the invention, and is during a certain period of time. After that period of time, others or that exclusive right will be lost. In other words, the idea of a patent is to prevent, as you see in the diagram, to prevent other parties from stealing your idea. You see in the diagram that we have an individual with an idea in his head, and then you have other individuals by the side who want to steal this person's idea. And so a patent is there to prevent the others from stealing his invention or his idea or his new process. So after having looked at the definition of patents, we can look at the accounting initial recognition of patents. And for that, the framework differentiates two types of patents. The first type are patents that are purchased or that are bought by the entity, whereas the second type are patents that are internally generated by the entity. In other words, created by the entity. So the first type I purchase patents, whereas the second type internally generated patents. And so we are going to look at each of these two types of patents separately to see how they are initially recognized in the financial statements. So patents are capitalized at their purchase costs if only the recognition criteria for intangible assets are satisfied. Remember that in one of our previous video presentations where we were looking at intangible assets, we said that intangible assets are identifiable non-monetary assets without a physical substance. And for them to be recognized in the financial statements, it must be probable that future economic benefits relating or will flow to the entity due to this asset, and that the cost of the asset can be measured reliably. So if it's expected that future economic benefits, it's highly probable that they are going to flow to the entity due to the patent that the entity has purchased, and that the cost can be reliably measured, then the asset can be recognized, or the patent can be recognized as an asset in the financial statements of the entity. In this case, the double entry will be to first debit account 2121 patents, and secondly credit the relevant treasury account if it was paid through cash, maybe account 571, or if it was paid through bank, maybe account 52. Why not even account 481 if it was purchased on credit? So after having looked at purchase patents, we are then going to look at how to initially recognize internally generated patents. And the costs of creating a patent are capitalized when they satisfy the conditions to be recognized as development expenditure. You may remember the conditions which we had talked in a previous video, which need to be satisfied to recognize any expense as development expenditure. We have things like the technical feasibility of completing the project. We have the ability of the entity to complete the project, the intention of the entity to complete the project, whether the entity has available resources, whether technical, financial, or human resources, in order to be able to complete or use the project. So when the cost of creating the patent satisfy the conditions to recognize as development expenditure, they are then going to be capitalized. And by so doing, we will debit account 2121 patents by the value of the patent, which means all costs incurred in the development phase plus costs incurred to submit or apply for the patent. And then we will credit account 211 development expenditure. So the double entry to recognize internally generated patents is for us to debit account 2121 patents and credit account 211 development expenditure. In other words, the expenses are removed from the development expenditure account and transferred to the patents account. Patents are amortized based on the duration of their protection to which it confers. As we saw in the slide where we are looking at the definition of patents, patents give protection to the holders for a given amount of time, and hence in the financial statements the patent will be amortized based on that amount of time stated in the patent right. So we have come to the end of the video presentation. We hope you enjoyed the video presentation on patent rights. Do check the page for more videos on the SYSCOHADA accounting framework. The current one, the upcoming one on licenses and software and the internet. So do not hesitate to contact us if you have any questions or suggestions, any queries. And we really hope you enjoyed the presentation, that it has helped you either in your academic activities, in your professional activities, at work. Have a nice day.